suggested to wait and watch until the NPA stabilizes. Amit, however, I would like to know from you if you could give us a number on the stop loss, because if, say, I as an investor have to wait on this investment, I should also know till what level should I wait, and what should my warning point be?
Yeah, hi, good evening for having me, and thank you for having me on your show. It's nice to be here. So technically speaking, as a technical analyst or a chartist, if I were to look at Bandhan Bank, the primary trend is that of downward, which means that this is a fund technically a weak chart. So I'm afraid I do not really have a stop loss, but my suggestion would be that this seems to be more of a value trap. There are better opportunities in the banking space that one could look at rather than holding on to a fundamentally and technically looking weak looking stock. So I would rather suggest that if they could probably move out of this counter and look for better counters.
All right, so that's a view coming in on Bandhan Bank. With that, we have our first caller on the show. So Ravi is calling us from Vijayawada. Hi Ravi, good evening. How can we help you?
Yeah, good evening, ma'am. Actually, I have started accumulating GMart shares.
Okay.
So I want to know the fundamentals of the company for 2 to 3 years perspective.
All right. And when did you buy it exactly?
Yeah, today.
Only, okay, today only. And what was the thought process behind buying SG Mart?
Yeah, the guidance, management guidance was strong for the next 2 years.
All right. So I'll get you a fundamental view on it, but also I'd like to get a technical view on the same company. But first, coming to you, Lancelot, how are the fundamentals of SG Mart looking like? Because I can see that it was down over approximately 2% there today and currently trading at 295 levels, and he's bought at 300. So what do you suggest?
I think, it's in a very competitive space, and there are a lot of bigger players, in this space with ability to sustain, significant downturns. And if you're looking at the business outlook, this is a challenging business because with slowdown in urban consumption, it's basically rural consumption that is supporting the retail segment. So you will find a smaller company will find it much more difficult during a downturn in industry to sustain and actually grow its business. So I would think that it's better to, whenever an industry is in a downturn, it's better to pick on the market leaders and stay invested with them because of their relative strength and the relative moat that they have. They would perform better than, the smaller companies in the space.
And Amit, do you also hold the same view for the short term?
I'm afraid I concur with my fellow analyst that this is a weak stock. Technically also, it has hit an all-time low, and it does not seem to show or offer any sort of, recovery or reversal in the making. So this will continue to be a cheap stock, which might probably get cheaper as we go along. If somebody has entered now with the hopes that, there could be some bit of value buying here, maybe 276 on the closing basis could be a technical stop loss for them. If it falls below that, then they should exit.
Okay, got it. Thank you for that view. And now we have Shravan joining us on the phone line from Andhra Pradesh. Hi, Shravan. Good evening.
Yeah, very good evening, madam.
Where in Andhra Pradesh are you calling from?
From Anantapur. From
nice.
Anantapur, Andhra Pradesh. Yeah.
Lovely. Please ask away a question.
Yeah, currently I'm holding Vedanta Hospital 100 shares with 612, I think, approximately.
Okay.
So almost 30% of loss I'm holding right now.
Right.
So I'm whether I need to hold it or whether I can able to shift it from Vedanta Hospital to the HCZ Hospital or maybe the HCZ Healthcare or maybe Apollo Hospital or Max Healthcare. So which will be the best choice and whether to hold it or whether to move it to the other counter?
Got
that
it.
is my question.
Understood. Yeah. So, speaking of the healthcare space, Lancelot, I'll take this question to you first, and I also want your perspective on this very angle. So, while a lot of investors today and experts, in fact, of the stock market and the equity markets have told that, pharma is divided into three segments. We have, healthcare is divided into three segments. We have pharma, we have diagnostics, and then we have hospitals. Now, hospitals is one segment that has been observed to be very cyclic in nature. And then you bring this context to investing in the stock market or such a stock of a hospital which is not giving very healthy returns. And one such example is that of Yatharth Hospital. Do you think amongst the three segments of pharma, hospitals, number one, is the right segment to invest in given the volatile scenario of the stock market at the moment? And two, if our viewer is currently sitting on a loss, when do you think this could turn into a profitable investment?
So I think your first question is which sub-segment of the healthcare space one should invest in. And I think when you look at investing in the, let's say, the diagnostic space, the diagnostic space offers, a faster return on capital, but with competition has a lot more, has a lot more. It's very difficult to generate that kind of revenues and that kind of growth across pan-India basis. So you've seen many diagnostic centers which are regional players, but very difficult for them to dominate the space because end of the day, most of the products that are given are actually off the shelf kind of products, and there's very little to differentiate between one diagnostic center from another. Then when you come to the pharma space actually has two or three different type of players. One is the players who are doing the novel drug discovery. They are actually doing a lot of research, and once they launch drugs, then they will they will distribute them in the country. So that is a very difficult space because the investment is very large. And from there, you have to actually generate revenues in terms of having a patented product, which means you've got to actually have molecules, ownership of various molecules. The other is the people who are actually looking at off-patent drugs and then taking those on and then generating a kind of a substitute for that, a cheaper substitute in terms of re-engineering, and then trying to sell them in the overseas markets. So those are companies which can benefit. In the past, they've had a very great business run, but going forward, you are seeing pressure because most of the original manufacturers who were on patent, they drop the prices significantly, and the new companies struggle after making a lot of efforts in terms of getting approvals, etc. So I would think that the hospital space offers, maybe better opportunity at this point in time. But the problem with the hospital space is it is a very capital intensive, venture. It's similar to like a hotel investment, right? The real estate is very expensive. So you have those hospitals which are following an asset light model, which are actually doing management of other hospitals or taking on, joint ventures, and those are the hospitals where one can look at investing. So I think Apollo Hospital is one which also has the pharmacy business within its space and within the hospital. So that is one which one can look at. And the other opportunity in this space is Narayana Hrudayalaya, because they are following an asset light model. And even the cost of building out new beds, etc., is actually fairly low. But this is a long gestation business, so one has to be prepared to stay invested for longer periods of time. As far as the specific, company is concerned, like I said, it's always better to move to one of the bigger players, which is Apollo and maybe Narayana. So it's worth exiting from the smaller players because during a downturn they will struggle, and you will find it very difficult to hold on to the profits or even minimize your losses in those stocks.
All right, and Amit, what do you have to say for the short term?
The thing is, overall, the markets have been facing a lot of heat. And this stock, if I look at technically also, though there is not too much of price data to really go into it, but still, with the limited data, what I do see is, from a technical standpoint, it is already, hitting the lows in all parameters. And if somebody has already invested and taken a stab at it, maybe, hitting an all-time low at 300, which is not too far from the current market price at 377, could be a hard stop loss, because you could also look at exiting even at the current market price and moving into a stronger player like my fellow analyst has recommended, which is Apollo Hospitals or Narayana Hrudayalaya, which even I concur, which are market leaders and have better business models. Yathartha, technically speaking, it is downwards looking and with stronger volumes. So I do not see too much of a hope here from a technical standpoint.
All right, all right. With that, let's go across to one more caller from Chandigarh. Hi, KK Sharma. Good evening.
Good evening, ma'am. Good evening.
Yes, how can we help you?
I have 1,000 shares from Himadri Chemical, Himadri
Alright.
Specialty Chemical at the rate of 130, purchased 3 years ago.
Yeah.
I want to retain it for a longer time since it had gone much higher earlier and it has now corrected a little bit.
Yes.
So I want to know what is its prospects in the coming 3-4 years.
Right, because as I can see that you spotted the correct levels to enter. You entered at 130 and currently it's trading at 414, and you are
Yes.
sitting on a profit of almost 3 lakh rupees there. But
Yes.
Lancelot, coming to you, since the chemical companies have seen quite a beating, and not seen a strong recovery, so how should one approach the chemical space?
So, I think if you have to look at the entire chemical space, you've got to break it down into specialty chemicals and, import substitutes. And then there are the export oriented, chemicals, which people are trying to do as far as, replacing the demand from China. Now, when you look at the chemical space, most of the chemicals are based on the current, the current chemistry that is available, and most of them are providing chemicals that are virtually like a commodity product. So there is very little to distinguish between, chemicals of A company versus B company. At the end of the day, they are all standardized formulation, and then it boils down to scale and the economy of scale that brings down the per unit cost. So in such a situation, companies which are larger in size and who have a larger market share are able to dominate the space because their per unit cost of manufacture is lower, and thereby you will ensure that people are able to generate profits even at lower sales prices. And currently what we are seeing is globally there is a move to to bring down the prices of chemicals because China is probably dumping a lot of chemicals into the marketplace. And whatever is happening in the global market, if there is overstocking or there is a inventory destocking that's happening, the prices will come off because you cannot store these chemicals for too long. So I would think that it's better to remain with the larger players who are in the space or who have specialty chemicals where there are very few other manufacturers who are providing the similar kind of molecules.
And do you have any suggestions?
So I think if you look at the results that came out, SRF did come out with good numbers, and there's also the view that certain chemicals or certain freon gases are being banned in the US, which is going to be positive for a company like SRF. So then there was this company Aether Industries, which also came out with better numbers. They are a contract research manufacturing company, and they are doing better. So I think these niche players are better placed rather than the broad, companies which generally would be producing in a mass basis.
Okay, got it. And now we have Ravi joining us on the phone line from Bengaluru. Hi Ravi, good evening.
Good evening.
Please ask
Hello.
away your question.
Yeah, I have Anantara shares, 50 shares.
Okay,
So it is bought at 685 levels.
685, okay,
Yeah. Now it's 510.
right,
So is it advisable to hold it for 1 year,
okay.
or shall I move it to Sai Life Sciences?
Should you move to Sai Life Sciences?
Yes.
Okay, okay. Very specific. Let's take this to Amit. Amit, Ravi wants to know if he should move to Sai Life Sciences from Anant Raj because number one, he holds 50 shares of this company at 685 and the stock is trading around 510 levels. Interesting part is that the stock has seen an upward trajectory for quite some time, but then did see a sharp fall around the 17th of Jan and recently recovered because of a deal that it made. Now, its Q3 earnings were good, but Anant Raj does not seem to be reflecting that in its stock price. What is your view on Anant Raj? And as Ravi suggested or asked rather, should he, exit this counter and, invest in Sai Life Sciences?
So technically speaking, Anantraj is at a higher time frame support levels, and this is a technically uptrending stock, as you also mentioned. So I would rather stick to this stock for the time being, keeping a strict stop loss of if the stock closes below 475, at least on the weekly time frame, because the correction has been recent and has been fairly sharp. But then, if you look at the overall structure of the market, the entire market has been, in a bear grip sort of a thing. So even a good stock can get pounded in this kind of market. So I would say that Anantraj would be a hold from my side, and with a strict stop loss of a close on the weekly time frame below 475. In the meantime, I will also check Sai Life Sciences and give you a view on that as well. Just pull it up.
Okay, sure. And meanwhile, you actually get your charts on Sai Life Sciences. Lancelot, what's your view on Anantraj? Because he made a very interesting point saying that, in a bear market, a lot of good stocks also tend to get the beating and suffer. Is Anantraj one of those counters you see which is suffering but has a bright future?
I think Anantraj is basically, real estate management company and a real estate development company. The major project was, I think, in Tirupati, where they were building a large complex, and they have been involved in, construction of IT parks. And I think the markets really, all these stocks sort of jumped up on the opportunity for adding data centers. And, there was this huge thought process that for AI, you would need large amount of data centers in India, and globally they would require more and more real estate where you have data centers and farms, server farms, etc. But I think of late, since since the stock has, the people have felt that okay, maybe with DeepSeek coming in, you may not require that kind of computing capacity. So there has been a little dampener to this huge excitement that was there about these companies. And I think that aside, that they are still very expensive. Even at the moment, Anantraj trades at almost 5 times price to book, which is very expensive for a real estate company. And I think it is probably in anticipation of winning all these big orders that the stock price had moved up. And now that it is, the sense is that these orders may not come in as anticipated, the stock is correcting. So from a long-term perspective, I think if one wants to be in the real estate space, one needs to be really careful about the valuations one pays, because this industry can be very cyclical. And during downturns, the downturns can be extending over 3 to 5 years. So I think it's better to avoid at this point in time, any investment in the real estate side of business.
Right, Lancelot. Thank you for putting that point across in such a holistic manner. And Amit, do we have a view from you on Sai Life Sciences now?
I'm afraid not, because as I see, Sai Life Sciences does not really have too much of a trading data. So from a technical or a chartist point of view, I'm not really, I'm unable to, make any major sense out of it.
All right. With that, let's go across to a caller from Tamil Nadu. Hi, Siraj. Good evening. How can we help you?
Good evening, madam. I'm holding 14,000 shares of Security India at the price of 50. I just want to know whether to hold the shares further or to exit. I also want to know short-term outlook for the share.
A short-term outlook on Sagility India. And when did you buy it exactly?
I think before 15 days, I think.
15 days back?
Yeah.
Okay, so it's a recent purchase, and in just 15 days, you are sitting on a loss of 46,000 there. And Amit, Sagility has a massive exposure to the US. So would Trump tariffs act in favor or against for the company for the short term?
I could give my comments from a technical standpoint. And as I see that the stock has been in a sideways sort of a trajectory since the start of this year, and has made a top of 55 with a bottom of 42. Current prices are around 46 levels. So I would say that one could look to hold this because it is at the lower spectrum of this trading range. If it closes below 44, 42 levels, then one could take a technical stop and exit it. Otherwise, one could hold on to this till the levels of 53. However, having said this, there is bound to be some pressure from the fact that this has a lot of exposure from of the US. and any negative news flow on the tariff side could play on the downside. So the overall view is that the market is a little bearish, so one could take it with a pinch of salt there.
All right. And Lancelot, since the net profit for the quarter increased by 85% from the July-September period to 217 crore, and the margins also expanded over 400 basis points. So what do you have to say? How are the fundamentals of Sagility India looking like?
Sagility India is in technology-based solution services mainly for health insurance companies in the US. And they are actually providing revenue cycle management functions, financial clearance, medical coding, billing, accounts receivable, and various follow-up administration services. But what one has to see is that while they were able to add more clients and expand the scope of their services, it's still trading. Even after the fall, it is still trading at a very high multiple. It's 50 times its forward earnings. So I think one has to avoid buying companies when the valuation is very high, because any negative surprise, even in 1 or 2 quarters, and you could see sharp declines in the stock, and that could hurt your capital, because if you lose capital, trying to regain the capital means you have to take a much higher risk. So I think one should, if you're in profit, book profits and stay out. If you're in a loss, and you're trading on a short-term side, one must have a strict stop loss and exit whenever the stop loss is hit.
Right. So that's the view coming in from Lancelot on the fundamentals. But with that, we'll have to slip into a short break. Keep sending in your queries on WhatsApp and call in. We'll be right back on Ask Profit. Stay tuned to NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit. Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your
Welcome back, viewers. You're watching Ask Profit only on NDTV Profit, a show where you ask your questions and we answer them through our guests. Joining us today is Lancelot D'Cunha on the fundamental queries, and Amit Goyal will be here to answer all your technical questions. So do call in on the numbers flashing on your screen. And let's head straight to our first caller after this very short break. Sanjeev is joining us on the phone line from Chennai. Hi, Sanjeev. Good evening.
Hi, good evening. I have got a question on Sundaram Fasteners.
Okay.
I am holding 120 shares at 1,100 rupees. Okay, I got two questions.
Yes.
One is that technically where this will find, the stock will find support, and if at all I need to buy in more, should I buy in more? Then what level should be I looking at? And then second part is that what impact the US tariffs will have on this company and also on the pharma stocks. So these are the two questions.
Okay, a lot of questions. Let's see how much we can answer. Let's start with you, Amit, on this one. So Sanjeev holds 120 shares of Sundaram Fastener at 1100 apiece, and now the stock is trading around 950 levels. It did see a brief period last year between June and November when the stock did trade at an attractive price, but now is falling way beyond from where it started the last year with. What's your reasoning behind the kind of weakness we're seeing in the stock price at the moment? Does it have something related to does it have something related to the company, or is it because of the overall sentiment of the market at the moment? And the second question, if you could also, substantiate on whether Trump tariffs would affect this.
Okay, so I can give you a technical view on this stock as I don't track this fundamentally. Technically speaking, it has already broken the previous support level of 1,000 rupees and is now trading at 957. So from a technical standpoint, the view is clearly bearish. Okay, and if somebody is really looking to average it out on this kind of a counter, given the overall market view of bearishness, I would not recommend doing that. So one should be looking to take a technical stop, which was at around 1,000 levels, and not really look at averaging it anymore. If one were to look at re-entering this stock from a trading perspective, I would again say that maybe at around at about 800, 850 would be the re-entry level if I were to find some sort of reversals over there. Technically, the stock is looking weak with strong volumes on the downside, and hence I would recommend that one could possibly consider, taking a technical stop on this.
All right, so technically the stock is looking weak, is what Amit is suggesting. With that, we have a caller from Hyderabad. Hi, Ravi.
Yeah, hi, very good evening.
Good evening. How can we help you?
Yeah, my query is regarding Coal India. So, is it a good time to buy Coal India, and I mean, at what price? And also want to know, does this stock has the potential to collect 10 to 15% in next 6 to 8 months?
All right. As I can see, it's currently trading at 361 levels, and which is down 35% from its peak. So, and also if you look at the 1 year chart, it peaked during the month of August, and now it has significantly, it's seen a fall from those levels. So, Lancelot, are you bullish on Coal India for long term, and are these the correct levels to enter?
I think, the stock had run up significantly in the past, and I think still looks, a little expensive, considering the fundamentals and the recent quarter results that came, which were not very encouraging. So I would probably stay away from, Coal India at this point of time. It's not really at its lowest, and unless, the profit generation changes, it's rather one should stay outside and wait for it to settle down.
Okay, got it. And now we have Anindya. He's calling us from Chennai. Hi, Anindya. Good evening.
Hi, very good evening, and good evening to all. I'm having query with this particular stock. I've shared the details with you.
Tata
okay,
Elxsi?
I'm having 20. Yeah, Tata Elxsi. I'm having 21 quantities with me. Okay. So the stock has been a laggard state for almost now 1.5 years or so. So I wish to hold it for next 4 to 5 years. I would just want your advice view on this.
Okay. And I will confirm your quantities once again. You hold 21 shares of Tata Elxsi at 6,341 apiece. Is that right?
Yeah, correct.
Okay, got it. Amit, what's your view on Tata Elxsi? Anindya holds 10 shares at 6,341. The stock is currently trading around 6,000 levels, and it went as high as 8,979, close to that last August, but now has been declining consistently. What's the reason behind the fall that we're seeing?
So from a technical standpoint, the primary trend of this stock is up. So, but if bought at lower levels, one could, be in good profits as a long-term investor. But if you look at the recent 2 years chart or 3 years chart, right, starting from 2022 onwards, it has actually has been caught up in a range of, as you mentioned, at the top around 10,000 rupees levels, and at the bottom, which is near the current, and the current price is near the bottom of about 6,000 rupees levels. So any further decline here, and if the price closes below 5,500, I would consider this to be a technical stop, because it would break down from this 2.5 year range, and I would look to exit this stock. But if you're an investor and looking to trade the range, as a technical analyst, I would say that this is the bottom of that range. And if you have entered at around these levels, one could look to hold on with a technical stop of 5,500 rupees levels and an immediate target of 7,300 on the upside.
All right. With that, we have a caller from Tamil Nadu. Hi, Mayappam. Good evening.
Yeah.
Yes, how can we help you?
I want to know about Supriya Life Science, madam. It is the right time to enter?
And why Supriya Life Sciences, if I may ask?
It is a pharma company. Now, if the demand may increase in the US, depending upon the tariff, how it will affect.
Right. So, a lot of pharma queries are coming in. Are you looking for a long-term view or a short-term view?
Long-term view.
Long-term view. Okay, Lancelot, coming straight to you. Supriya Life Sciences, it reported good quarter 3 numbers and it's currently trading at 628. But it was down over 2% today. So what do you suggest for the long term? Is it advisable to stay invested in this particular stock for another 2-3 years?
I think, this industry is going to undergo a lot of change and a lot of challenges will come up, especially one with, overseas tariffs coming in on pharma companies, as well as, the weaker players going to find it difficult to sustain, especially when people are dropping their prices in order to maintain the market shares. So it's always better to be with larger companies like Syngene Life Sciences, and maybe one should look at exiting at lower levels and then exit, and then remain invested in the larger companies rather than the smaller ones.
Okay, understood. And now we have V. Venkatesh calling us from Bengaluru. Hi, Venkatesh. Please ask your question.
Good evening, madam.
Good evening.
I am holding the 1,000 shares of Adani Ports at an average price of 1,383.
Okay.
And I am running presently at a loss of around 21%.
Okay.
I would like to know, it's for long-term investment. I would like to know whether it is the right time to add some more shares, madam.
Okay. And how long do you intend to hold Adani Ports for?
3 years, madam. Another 3 years.
Another 3 years. Okay. Lancelot, we will come to you on this one. V. Venkatesh from Bengaluru. He holds 1,000 shares of Adani Ports at 1,300 or so a piece and is currently at a loss of 3 lakh, bearing 21% drop down from his buy price. Now, the stock also has been decelerating on the stock exchanges since August 2024. What would your suggestion to Venkatesh be, and would it be a prudent action to hold on to these shares for the next 3 years as well?
So, Adani Ports is one of the most profitable companies as far as the business of, Adani Group is concerned. And I think if you look at the port infrastructure, it's been operating for quite a while. You are seeing, significant uptick in trade, especially in commodities, etc., which are mainly handled by the port. And I think it's one of the key, let's say, ports which will bring goods into India through the sea. So this is one stock which, while its debt was a little bit at an elevated situation, but now has been, gradually being reduced over time. So I think one should look at holding on to this, and there could be other acquisitions in the port industry that could come from, that would add, inorganic growth to the company, and that coupled with its organic growth business, I think should have a much better outlook going ahead from here. So one could hold on to it.
Hold on Adani Ports, and just a disclaimer, viewers, NDTV is a subsidiary of AMG Media Networks, the channel you're currently watching. And now we have Sumit joining us on the phone line from Qatar. Hi Sumit, good evening.
Good evening, for taking my call.
Most welcome. How can we help you today?
Can I enter the BSC stock at this price?
Okay. And Sumit, I'd like to know why you're interested in BSC, although it's a good thing to be interested in this.
Because I have already CAMS and CDSL. I said, let me buy this too.
Okay, got it. Amit, what's your view on BSC? The stock has been on an upward trend for quite some time, but do you think, given its position at the moment, do you think it's forming a plateau of sorts?
Okay. BSC, we have all seen the stratospheric rise in this stock, and even the current price action does not seem to suggest too much of a correction. It has come towards a weekly support and is seen in the current week, taking some bit of support here. So if you're looking to enter purely from a technical standpoint, one could look to enter the current levels, keeping a very strict stop loss of the week low, which is about 4,900. So if the stock closes below 4,900, I would, for the time being, look to get out of it, taking a technical stop, simply because, as I said, as I continue to maintain that, given that overall, see from a technical standpoint, if the overall trend of the markets are bearish, then even the strongest stocks would tend to take a beating, or at least they would not move up as you would expect. So if you're entering, enter with a very strong, a very strict stop loss of 4,900 levels.
Okay, with that, let's go across to one more caller who's calling us from Bengaluru. Hi, Setu.
Hello, good evening to you.
Good evening. How can we help you?
Yes, I would like to know about ABB India. Is it the right time to buy now?
All right. If we could pull up ABB to see how was it trading today. Okay, so it was down almost 2%. And it's currently trading at 5,093 levels is what I can see. So are you looking for a long-term view or a short-term view? Setu, are you there on the line? Okay, I think we've lost the line there, but since he hasn't mentioned as to what is the time horizon, I'd come to you, Lancelot. For a longer term, is it advisable to stay invested in ABB India?
Yeah, I think, ABB is focused on electrification and automation. They have a robotics division, which handles a lot of plant automation. So I think they are being in the high technology area, and they're also focused on energy efficiency with motors, generators, drives, a lot of which will be required in the EV segment, the electrical vehicle segment. Plus, they've been actually doing a lot of turnkey engineering, projects with control systems. So, from a technology perspective, ABB is one of the leading technology providers, to a lot of infrastructure projects, a lot of power management projects, grid projects. So, the longer-term growth outlook for ABB is very strong in India. However, in terms of valuations, even after the fall, it's trading at almost 60 times earnings. And you can't have that kind of a valuation and expect that the company will continue to deliver earnings that will justify that kind of a high valuation. So even if one looks to buy it at this point in time, you must be prepared that any kind of negative earnings surprise, you could see the PE multiple correct significantly, maybe even 50% from here. So, but given the long-term outlook, if one is looking to buy, then it's probably maybe you can buy some quantity at this level and then keep buying as the stock falls. Because long-term, yes, the company will outperform and provide good returns on its investment.
Okay, got it. And now we have another international caller. Calling us from Dubai is Jacob. Hi, Jacob.
Yeah, good evening. I just wanted to, I'm just a new investor, and it is very good that I'm able to get you up. I just wanted to know, I'm looking for a 5 years term of investment for a long term, especially in the Indian Oil Corporation as well as IRTCC. Is it the right time to buy the stock?
Okay, got it. Amit, why don't you take IRCTC first? Jacob wants to know if this is the right time to enter. What's your take?
Yeah, so the stock has corrected quite strongly, if I may say so, of about nearly 30, 35, 40% from the top. It seems to be making a technical cup and handle sort of a formation. So this seems to be a nice level to enter the stock, technically speaking. At 700, 719 levels, this could be a good entry point because it is close to the weekly pattern bottoms. I will keep a strict stop loss if the stock closes below 550 or 600 levels on a weekly time frame. So you could, instead of entering a lump sum, given the overall market view, one could stagger their investments in a couple of tranches, starting from these levels, and look to add at every if the stock continues to show some downward movement at every 50 levels of dip, you could probably add in a couple of tranches and average your stock price, because the level seems to be good from a technical standpoint. And if the market reverses and the stock reverses, then there is long-term targets of about 1,000 odd levels. So this looks good from that standpoint.
Got it, got it. And Lancelot, can we get your fundamental view on IOC?
So you see, IOC is one of the oil marketing companies, which is processing crude and refining crude and then distributing, petroleum products in the country. Now, these are all going to be impacted by the fact that maybe India may have to buy crude from US or may lose the opportunity of buying crude from Russia at such a steep discount. Now, if that happens, the entire increase in the price cannot be passed on to the consumers, and there could be a situation where the company is forced to absorb some amount of loss on this account. We already are expecting a loss because the rupee, which went from 83 to 88, 89, will increase the import cost of crude in rupee terms, and all of it may not be passed on to the consumers. So at this juncture, it's a little bit it's a high risk investment because it's currently trading at almost 8 to 10 times book value. So I think it's a little bit high risk, and then one may see any kind of negative news coming in, and we could see a further fall in the stock. So it's better to stay away from companies that could have a major impact, based on global crude prices as well as US actions on the import side.
Okay, Lancelot, a very interesting point that you made is that IOC, being a very big oil company, is quite vulnerable to what's happening globally, especially Trump tariffs. And then you also talked about currency depreciation as a major factor. Just for clarity, on record, I would want to know if you're suggesting to stay away from the oil sector itself, or are there big companies that one should be wary of?
Oil sector, you have the exploration companies which are like ONGC, and then you have the oil marketing companies which are basically BPCL, IOC. So I think these are the ones which are going to be difficult to sustain, given the valuations and given that they may have to bear a large amount of cost, because the government may not allow them to pass on entire increase because it could be inflationary for the country and economy. But there are the distribution companies which are, in the gas segment, your Mahanagar Gas, and these are the ones who should be benefited, in terms of being able to continue to grow their bid. Basically, they are growing the distribution, and they've tied up gas at lower prices, and they should be able to pass on that, to the consumers. So maybe those, if one wants to invest in oil and gas sector, I think those would be a safer bet to invest as compared to either the oil exploration companies or the oil marketing companies.
Right, thanks for that view. Now let's get into a very pilot mode. Let's take another caller quickly. Hi, Keshav. Yes, good evening. How can we help you, Keshav?
Yeah, this is regarding the Natco Pharma.
Okay.
I'm holding around 450 shares with an average of 1054.68.
Right.
So I would like to know where this stock is heading.
Right, because all the pharma sector stocks are seeing a beating there, and you are sitting on a loss of almost 1 lakh rupees. So Lancelot, I know that you've answered a lot and you've spoken a lot on the pharma sector, but quickly if you could just tell us about this company's performance, Natco Pharma.
So I think Natco is, has been a good player in the pharma in the past, but going ahead, we need to consider that in the US, whatever is happening is not going to be positive for Natco Pharma. And if one looks at it, while it majorly manufactures active pharmaceutical ingredients, which are APIs, any kind of tariffs or any kind of costs that are put on this, the persons who are purchasing it can immediately move to lower cost economies or lower cost production centers. So there is a major risk in terms of further downside in terms of its earnings, and that could result in in a high risk. So when you look at it from a risk to reward ratio, I think at the moment it's not really a buy at this point in time.
Got it. And now very quickly, Adarsh is joining us on the phone line from Thane. Hi Adarsh, good evening. Shoot your question.
Ma'am, good evening, ma'am. I'm having shares of FACT, F-A-C-T.
Okay.
40 numbers, and I am averaging it from past 1 year.
Okay.
Average price is 772.41, madam.
Got it. And do you want a short-term view?
Madam, another 1 year, madam.
Okay. Amit, what's your take on this company? The stock fell close to 5% in trade today and has not given good returns to our viewer. How should our viewer go about investing in this company?
So, I firstly comment on him, comment the viewer that he has been averaging it for the last 1 year and his average price is fairly and respectable 770 odd levels, if I heard it right. So, congratulations on that intelligent way of investing in it. I also do see that the stock has come to a higher time frame support level on the monthly time frame. So I will keep a technical stop of about 600 levels, and he could continue doing what he is doing, that is averaging into this. And hopefully from here, because there are certain signs that technically they should form a base around 700 and 600, between 700 and 600 levels. So I'm hoping that there could be a technical turnaround on this stock with targets of about 1,000, 1,100 as well. These are fairly long-term views in the sense that the chart that I'm looking at are the monthly charts. So one could, look at holding on to it and probably even averaging, keeping a technical stop of 600 levels.
Thank you so much for your view, Amit. And with that, Amit and Lancelot, thank you for joining us and answering all the queries of our viewers. We really appreciate your time, but we're out of time at the moment. And viewers, today NDTV Profit had its very first conclave. We had an amazing lineup of speakers focused around the pillars of Viksit Bharat. So we hope that you did see all these conversations aired on television today. And if not, go to our digital channels. All the interviews are lined up there for you to watch and do comment in. And for more news and updates, stay tuned to NDTV Profit. A lot more lined up for you on the other side.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only.
NDTV Profit's first conclave kicks off in Mumbai with the who's who of corporate India and market veterans. Union Minister Piyush Goyal at the NDTV Profit conclave tells Indian industries not to panic over reciprocal tariffs, adding that they should be confident in their competitiveness as there lies a massive opportunity ahead. Morgan Stanley's Ridham Desai believes we are already out of the slowdown. He tells NDTV Profit that the Sensex is at its cheapest in 4.5 years. NSE's Ashish Chauhan and Angel One's Dinesh Thakkar talk about how the investing has become democratized in India. A unanimous call on reciprocal tariffs by the Trump administration as Indian manufacturing giants tell NDTV Profit that reciprocal tariffs will not hurt India. The additional cost will be passed on to the US consumer. Markets remained volatile and ended nearly unchanged, taking a breather after Monday's move. Following an initial decline, Nifty gradually recovered throughout the day, erasing all intraday losses. Sectoral trends remained mixed, with FMCG and auto among the top losers, while IT posted decent gains. Anand Mahindra says we are here to stay after Elon Musk's EV car organization Tesla puts up a post on LinkedIn hiring for roles in India. And a big relief for YouTuber Ranveer Alabadia as the Supreme Court stays his arrest but pulls him up for his abusive language on India's Got Latent. And Prime Minister Narendra Modi holds a meeting with Amir of Qatar Sheikh Tamim bin Hamad Al Thani as the two leaders decided to elevate India-Qatar relations to a strategic partnership with focus on trades, investment, technology, energy and people-to-people ties. And good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana, and for the next half an hour, we're going to bring you the latest on markets as well as national and international news. Moving on, with the announcement of reciprocal tariffs by United States President Donald Trump, there has been ongoing discussion and back and forth about how the Indian economy will tackle this challenge. Union Minister of Commerce and Industry Piyush Goyal spoke at the NDTV Profit Conclave, assuring that there is nothing to worry about. He believes that India and the US can provide mutual benefits to each other. Let's listen in.
Our situation with America is pretty much different than many other countries. And therefore, as I said earlier, we complement each other. We can give mutual concessions to each other, tariff reductions, make it easier to import and export both between the two countries. We've already taken a significant number of measures to strengthen the US-India relationship. We have both strategic, bilateral, multilateral engagements. We have defense ties. We have strong ties in education and people-to-people ties. So together, we are working on several initiatives. Trade will supplement our efforts to do much greater good for the people of US and India.
And this sentiment has been voiced across the board today on NDTV Profit's conclave, as Dr. Habil Khorakiwala also said that reciprocal tariffs by the United States would not hurt the Indian industry. Here's why.
Basically, to make a change in formulation, for example, takes roughly 3 to 5 years. So from that context, there is, unlike steel or cement, you can switch suppliers at a day's notice. You can't do this in our industry. So the view I have is short term. Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected. Okay. But long term, one doesn't know what happens after 3 to 5 years.
Yeah. Meanwhile, SBI's chairman C.S. Sethi said that core sectors like steel are not spending and has encouraged these sectors to come forward and not to fear too much about these reciprocal tariffs. Let's listen in.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening. Maybe, we are kind of an outlier because we are the largest player in the project financing. So obviously, whatever projects there in the market will come to us. So if you see our pipeline, I mentioned in my analyst meet also that we have, both in terms of the capital expenditure by the public sector as well as private sector, is almost about 2.5 lakh crores, which is a very good visibility. And I also mentioned that the sectors which are not actually spending is the core sectors like steel. And it's not about that they don't have the domestic consumption or demand, but I think everybody is watching what is the external sector is going to be. You did mention something about tariffs, right, to the Commerce Minister. But it's a fact that all of these core sectors are waiting, particularly steel is waiting, that how these tariffs, not in India, but in other countries, how is it going to play, whether it is going to lead to any dumping. Yeah. So this is something what everybody is watching. But otherwise, I see the sectors like, renewables continue to be doing well across the segments within the renewables. Roads are doing well and data centers are doing well. So if we measure the private capital expenditure only by way of steel, cement and these things, I think we need to wait for some more time for the dust to settle down in the West and then things become clearer.
And another perspective on reciprocal tariffs as Welspun's Dipali Goenka said that she expects bilateral tariffs rather than reciprocal tariffs as the US and India meet and discuss the next move. She spoke at the NDTV Profit Conclave 2025.
While we talk about the tariffs, I think, first of all, I think it's going to be more bilateral, because I think when we're talking about two countries, they've already come to a conversation where they're going to be talking about growth in both the countries, and it's going to be beneficial to both the countries. So I think for me, I am more positive about it. To Mr. Khorakiwala, when he talked about it'll be passed on to the consumer for us in home textiles, it is a very small part of that wallet share where, we are that towel or a sheet or that rug that they use, and it is very, very sensitive. So I think it will be something that we will have to work mutually.
And on to some other discussions that took place at the NDTV Profit Conclave. According to Ridham Desai, they are already out of the slowdown, as per Morgan Stanley's Ridham Desai. He spoke at the NDTV Profit Conclave earlier today.
I don't think it's anything out of the ordinary. Markets do not go up in a straight line. They're bound to produce some volatility from time to time. The genesis of this particular one, I think, was the slowdown in growth that happened largely because the government started consolidating its fiscal deficit, and the central bank continued to pursue, I would say, quote-unquote, hawkish policies. And that, I think, set the stage for a slowdown which has, I think, lasted for 2 quarters. In my view, we are already out of that slowdown. The budget was a phenomenal one. I have titled it a magic budget. It continues to consolidate the fisc, but at a much slower pace, only 40 basis points versus 120 in the trailing 12 months. It has increased capex share of GDP by another 20 basis points to another record high. And of course, it has cut tax rates as well. So it has got an incredible combination for the economy. And at the same time, most importantly, the RBI pivoted. And the market has just ignored what I think is one of the biggest pivots in modern central banking history of India, where it has gone all out to convert liquidity into positive territory, cut interest rates, and taken the foot off the regulatory pedal. If credit growth doesn't accelerate from 11 back to 17, I'll be very surprised. So this is like, I am just amazed that people don't see this as an opportunity. In hindsight, they would realize it.
And what can help in improving the number of investors in the stock market and also reduce the cost of transactions? It's the democratization of investing. This is what Dinesh Thakkar, the chairman and MD of Angel One, believes. Let's take a listen in.
This is my experience. When people in this financial industry also, they do not have kind of time or full knowledge about what asset class are available and what's the right way of approaching in terms of managing their financial goals. So I believe AI is a best kind of tool which can help personalize every journey. See, an app should be able to scan the whole ecosystem, what products are available across, especially for Indian market, for India. And how do we match or how do we kind of build confidence in investor to take first step? I think best step was introducing sachetization of the SIP 250. We have to reduce the cost. What is prohibiting us from introducing all this product in a very sachetized or tokenized or fractionalized way is cost of transaction. If you are able to bring it down by using technology, be it regulator, be it exchange, be it banks, I think that will create a big surge of new set of investors who will start investing 100, 200, 500 rupees. People feel that equity is only for rich, wealthier people. So we have to democratize, we have to build confidence, we have to build intelligence in our app so that it gives confidence to every person in India that even if you want to invest 100 rupees regularly, this can be invested on this app.
And capitalism without capital is the buzzword today because new businesses don't need much capital now. That is the word coming in from Ashish Kumar Chauhan, MD and CEO of NSE. He also spoke about how the number of retail investors in the stock market has exploded in recent years.
You are going to see a lot more companies which will come. Earlier, you required a lot of capital to create more capital. 1970s is first time where some of the young companies came, raised funds from the public, became large like Reliance, and then Infosys proved that you don't require a lot of capital to begin with.
Sure.
And now, newer technologies are not requiring a lot of capital. I call it capitalism without capital. And that's where you will see a lot of youngsters aspiring to become entrepreneurs in variety of areas. They'll come raise funds from the markets because despite whatever proclamations and page 3 of newspaper you see, the private equity and venture capital don't fund even 1% or 0.1% of the actual companies that want to be funded. And today I have 22 crore accounts of investors, 11 crore unique investors. 20% of all households in India are now trying to fund the dreams of entrepreneurs.
And although the theme of NDTV Profit Conclave was Viksit Bharat, according to Rajesh Sharma of Keynes Technology, he has said it's not Viksit Bharat, it's Re-Viksit Bharat. He explains the reason behind this statement. Let's listen in.
First thing I'd like to say, actually instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Re-Viksit Bharat.
Re-Viksit Bharat, because if you read the history of India, in the AD 1 to 1000, India had almost 33% of the world's GDP share. And we are talking in 2047 to reach that level again. So if you're talking of that, and that's where something where the government is working towards, it's very important for the success of scheme like this where the industry leaders do come together. In addition to that, the government policy makers have to join hands together, very strongly supported by the financial markets. Because without financial institutions coming forward, a collaboration between these three segments is extremely critical for manufacturing to really become large in the country.
Meanwhile, let's take a quick look at what's happened in the markets today. Indices have closed in the red with Sensex slipping around 30 points and Nifty down by 14 points. Most sectors were in the red with pharma, FMCG and auto dragging the sector lower, while IT was in the green up approximately 1%. Agam joins us with further details. Agam, over to you.
Well, it was an uneventful day for the benchmark indices with the Nifty closing marginally in the red, as was the case for the Bank Nifty. Now, at the moment, we haven't seen too much traction with respect to a significant amount of volatility. Even though the WIX was up, we didn't see too much of that relaying as far as the benchmarks are concerned. Moving beyond that, as far as the constituents of the benchmarks go, we did have strength in NTPC, Tech Mahindra and Wipro. These three counters advanced by around 2.5 to 3%, and on the declines we did see weakness in IndusInd Bank, Trent and BEL. In fact, do remember that Trent and Bharat Electronics were one of the bigger movers in 2024. We continue to see further weakness in some of these counters ever since, and especially since they have joined the Nifty 50. If we move beyond and consider the broader markets, the mid-cap index and the small-cap index, well, we haven't seen as much weakness there, but there were plenty of counters there as well, which did see sharp cuts coming through. But now that we are behind in terms of the earnings season, we will look forward to plenty more triggers with respect to the RBI monetary policy, along with, well, a lot of the other macroeconomic data, which could perhaps provide the trigger for the next leg in terms of the move. But as far as the market structure, the technical structure of the benchmark is concerned, it still remains weak at the moment, and well, a lot of traders and market participants are waiting for about a short covering to come through before we start seeing a little bit more action towards the buying side.
Absolutely, Agam, a wait and watch approach there. Let's also look at the fund flow. Foreign institutional investors that were net sellers this evening, offloading shares worth 4,786 crore rupees, while domestic institutional investors mopped up shares worth around 3,072 crore rupees. And moving on, Tesla's latest job posting on LinkedIn suggests the company may finally be gearing up for its India entry. Tesla posted 13 job openings on its LinkedIn page, covering both customer-facing and back-end roles. Now, this hiring move comes shortly after Tesla's CEO Elon Musk met with Prime Minister Modi during his visit to the United States.
So very interesting developments this morning. Tesla on its website has listed 13 job openings from sales and service for Mumbai, which indicates that the company might set up its first store in Mumbai sometime later this year. That's what our sources have also told us. A low-cost model, as was initially rumored, is not in the works at this point of time, but the company will come with its entire model lineup from the Model 3 to the Model Y in India. But the Cybertruck will not come in India at this point of time. The companies that it will impact are majorly the German car makers, your Audis, BMWs, as well as Mercedes, because that is the ballpark price that the company will charge. Remember, they are coming into India, or their likelihood of coming into India is after a tariff cut that the government of India announced in the budget to about 70% for high-end cars, which means they'll come in about 50 lakh rupees for the Model 3 entry-level model. That's still 20 lakh higher than what Mahindra would charge for its XEV9e and the BE6. And it will be somewhere little lower than the Mercedes, Audis and the BMW. So their pegging will be around at about 50 lakh rupees. So you expect the Germans to face the brunt of the entry of Tesla, but the Mahindras and the Tatas will not be impacted immediately.
Absolutely. In fact, that's what Mahindra and Mahindra chairperson Anand Mahindra exuded confidence when asked about the impact of Tesla's potential entry into the Indian market. A user on X inquired, how would you handle the competition if Tesla were to enter? And in response, Mahindra noted that similar questions have arisen since the liberalization of the Indian economy in '91. But we are still here, is what he said, and working tirelessly to remain relevant even a century from now. And meanwhile, Mahindra and Mahindra's Group CEO and Managing Director, Anish Shah, also told NDTV Profit that he was confident of competing with any foreign competitors that are entering the market, and also took to Twitter. Let's have a look.
Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks.
And now the Supreme Court has given YouTube personality Ranveer Alabadia, who is under fire over comments during an episode of show India's Got Latent, relief after it said no further police cases could be filed against him on this matter. The court also said the YouTuber who claimed death threats to his family and himself could now approach Maharashtra and or the Assam police for protection of life and liberty in case of threats. NDTV's Anuj Rayate sent us a report on the same.
You know, all the panelists from the India's Got Latent show were expected to be in Delhi for a discussion on this matter with the NCW on the 17th of February, that is yesterday. But all of them gave different reasons for their absence, right? We had Samay Raina, who still holds on to the fact that, whose team rather holds on to the fact that he is not in the country and hence demanded for a different date. Ashish Chanchlani's team stated that his health is not keeping well. We had, Ranveer Alabadia, who gave a similar reason to what he told Mumbai police as well about the perceived threat to his life, which is why NCW has also given a different date for for a discussion with him, which is the 6th of March, which is close to a couple of weeks from now onwards. With that and his stay being put on his arrest, that clearly is some amount of relief for Ranveer Alabadia. But considering the fact that the way Supreme Court made such kind of strong observations in this case, not just about the language and the nature of the show, but also about putting some sort of restrictions on him, his travel, and has demanded full cooperation from Ranveer Alabadia with different authorities, will be a major factor to be seen in the future, especially considering that in the last week or so, the summons have not really gone consistent with the kind of approach or the kind of reaction that he's had. He's been out of reach for the police. His legal team has been out of reach on multiple occasions, and that is something that he probably cannot afford to do in the future.
The Supreme Court giving relief but coming down hard on YouTube personality Ranveer Alabadia. Moving on, Prime Minister Narendra Modi held a bilateral meeting with the Emir of Qatar, Sheikh Tamim bin Hamad Al Thani at Hyderabad House in New Delhi. The two leaders participated in delegation-level talks aimed at strengthening ties between India and Qatar. The Qatari monarch is currently on a 2-day state visit to India, during which he will engage in discussions on trade, investment, technology, and other ways to enhance cooperation between Doha and Delhi. Breaking established norms, the Prime Minister personally welcomed Sheikh Tamim bin Hamad Al Thani at the New Delhi airport. Now, this visit marks the Emir's second trip to India. His first was in March 2015. And Arun Chatterjee of the Ministry of External Affairs stated that India and Qatar are anticipating strong partnerships and are exploring the possibility of a free trade agreement. This comes amid the Emir of Qatar speaking to Prime Minister Modi and President Draupadi Murmu to elevate India-Qatar ties. Let's listen in.
Just a while ago, the Prime Minister held bilateral talks with His Highness the Emir at Hyderabad House. Both leaders recalled the historic trade linkages, deep-rooted people-to-people ties, and robust bilateral relations between both the countries. They expressed the desire for further expanding and deepening of the multifaceted relationship between the two countries. Both sides have today agreed to elevate the relationship to a strategic partnership, and India and Qatar have signed an agreement in this regard today.
And Gyanesh Kumar is appointed as the next Chief Election Commissioner by President Murmu. Gyanesh Kumar replaces Rajiv Kumar, who has demitted office today. Gyanesh Kumar is a Kerala cadre officer from the 1988 batch who retired as the Secretary of the Ministry of Cooperation in January last year. He has been the Secretary in the Amit Shah-led ministry since May 2022 and holds a B.Tech degree in Civil Engineering from IIT Kanpur. He has also studied business finance at the Institute of Chartered Financial Analysts of India. And news coming in now from Canada. A Delta Airlines plane carrying 80 people on board crash-landed at the Toronto airport and flipped upside down. This incident left at least 18 passengers injured. However, no deaths have been reported in the incident. The incident took place when the Endeavour Air flight from Minneapolis in the US was landing in Toronto hours after a massive snowstorm had hit the country. The plane crash-landed on a snow-covered runway. And within seconds, black smoke was seen coming from the plane as it flipped upside down. And that's a wrap on this edition of the broadcast. Good evening and thank you for watching.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Viksit Bharat, and while the share of manufacturing may have come off in the last few years, the focus of the government as well as the private sector seems to be on enhancing the manufacturing prowess in India. And as we stated, one group present across key manufacturing industries and actually key service industries is Mahindra & Mahindra, and the architect of the group's current strategy has also a sharp mind on what the nation can do to enhance the manufacturing prowess. Dr. Anish Shah, absolute delight to be with him in this fireside conversation. Dr. Shah, thanks so much for coming by.
Thanks, Neeraj. It's a pleasure to be here.
Yeah. So I think the question on everybody's mind is that if there's so much of focus on manufacturing of the nation as a whole, policies for it, etc., how is it that the share of manufacturing in GDP isn't quite inching up at the pace that it should? If anything, it's maybe come off a little bit, but that may be because services have done really well. How do you view that enigma?
It takes time for that change to take place, and a number of efforts have been put in place already to make it easier to do business in India, to improve infrastructure, to reduce logistics costs, to have companies focus on innovation. And all of that starts coming together at some point. From a Mahindra Group standpoint, our leaders 20 years ago had a vision, and their vision was to create R&D in India, to ensure that India could create the best vehicles. And that was the birth of the Mahindra Research Valley in Chennai. As I said, it takes time. And it has taken us time as well to really be able to harness the strength of our research center. And what you've seen over the last 5 years is products that were put in place earlier, but we are delivering now. What you're seeing in the last 5 weeks are our electric vehicles that are also coming, which are entirely born in India and out of research and development here. But it takes time for that to happen. And today we feel very proud that our products are of a quality that can match up to any international standard and can really compete with anyone out there in the world.
Yeah, well, that showed in the way the bookings happened on Friday, and quite stunning really, Dr. Shah. So just trying to understand, I mean, you reckon that, and congratulations on that number, by the way, quite fascinating, though I must say that it didn't come as a surprise. I mean, the sneak peek that people got of the two vehicles that you kind of opened up, if I can use that term, it was partly anticipated because they just look so good. So great stuff there. I would love to understand, as you think of the group strategy, and you're a large group, you're the architect of that strategy. As you think of the group strategy over the course of the next 5, 10, 15 years, do you reckon the opportunity and the incentives for enhancing manufacturing are there for you and other groups to really enhance the Indian manufacturing prowess? Because without that, the goal of Viksit Bharat might not quite be achieved.
So we feel very confident about that, especially after what we've seen with our electric vehicles and what we've seen with our tractors. So India clearly has the ability to manufacture at scale, to manufacture at a lower cost. It does require a few more efforts for that to happen, but we've been able to show this with our products. And we've had many questions over the years around how will you compete with all the foreign companies coming into India. There have been many who've written us off at multiple times over the last 20, 25 years as well, saying that the entry of such and such company is going to be the death knell for us in either automobile or in farm. And our teams have been able to show that they can manufacture in India at strength and be able to compete with the global majors in a very significant way. Over the last year as well, on electric vehicles, there were a number of questions saying, how are you going to compete if such and such company comes into India? And our response has always been, our products will speak for themselves. And that's what they're doing today. And this is a strength that not just us, but we see other Indian companies also bringing to the fore and essentially setting up the opportunity for India to be a manufacturing hub for the world. And that is what we aspire to, and that is what we feel confident we will be able to deliver in our path to Viksit Bharat.
Okay. And I'm going to make this equal parts manufacturing as well as services, because less Mahindra and Mahindra, I mean, yes, the dominant share is auto. There's lots beyond that, right? And would love to talk about that too. But just for a moment, because you mentioned that point, I can't not invoke that conversation, right? This whole talk of one Tesla coming in, the Chinese companies, BYD, etc., making their presence felt. Now, your numbers, booking numbers speak for themselves. But I'm still trying to understand, not just for Mahindra Group, but for others within the auto ecosystem. How would the industry face up to deep-pocketed global car companies or vehicle companies wanting to create their foothold in India? Just trying to understand.
Neeraj, that's a question we've been answering for the last 25 years. Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks. And I'm glad you were talking about services as well, because we do remind everyone we talk to that auto today is just 1/3 of what we do. Mahindra plays in 70% of India's growth over the next decade. And we are in multiple sectors, and some of those are growing very well and contributing very significantly to our businesses as well.
Yeah, most certainly, and I'll come to that. Just so sorry, if my question came across that, oh, Indian companies will find it difficult to compete with global brands, no, because in some sense, Indian companies are global brands unto themselves. Your tractors in the US, I mean, making a mark, right? And Indian tech companies making a mark globally. So I didn't mean it that way. What I was just trying to understand, because a lot of these global brands are very famous per se, and there might be an allure for that. But I get the answer. You're saying that the products for you and for other companies will speak for themselves. Now, my question is the current economic momentum in India, which is maybe a bit slacking in Q2, picking up slightly in Q3, conducive for Indian companies to think big in the near term? Is this a passing phase, or is it difficult to say whether this intermediate slowdown that we have will get over in a hurry or not?
So there, Neeraj, we feel that the fundamentals in India are very strong. And they are further strengthened by some of the actions over the last few years. The digital stack today makes it much easier for us to do business across multiple sectors. Improvement in infrastructure is starting to bring logistics costs down. And a combination of all of these will enable the economy to grow even faster. We see this recent slowdown as a blip, and with some of the actions taken, we feel that we will be back on track. I personally do expect that we should be seeing growth north of 8% in the near future as well. And that's something that I think the Indian economy will be able to deliver, because we've grown at 6.3 to 6.5% over the last 30 years. And there are a number of positives that we have in place today that we didn't have over the last 30 years. So we should be able to see a faster growth rate. And we're investing in a significant manner across multiple industries. And we feel very bullish about the India story.
There's some bit of pivot that this budget has taken, if you will, right? That there is a focus on consumption being given. It may be a small portion of the overall economy size, but it has a multiplier effect. The moves taken in the budget, if you will. Do you reckon that this move towards 8% growth, and I heard you say near future, it may be 1 year, 2 year, 3 years, depending on where you believe. In fact, would love to know that as well, if you have a kind of time gauge in mind. But two, would consumption and manufacturing both play an equal part into this, or can it ride on the plank of manufacturing alone?
It has to be both, because consumption is what will drive further private sector capex. And there has been concern, and rightly so, that private sector capex hasn't quite kept up, and government capex is really what has taken the economy forward over the last 3 or 4 years. But private sector capex comes in when capacity utilization goes higher. That's driven by consumption. And therefore, we feel that this is the right path to take. And this consumption boost will enable private sector to put in even more capex, and that creates a virtuous cycle that allows the economy to grow faster.
It's been elusive, sir. I mean, this capex, and I'm not blaming the private sector, right? The private sector will put in capex. I'm not talking about you, but in general, the private sector will put in capex when they see the right kind of IRRs for the project. But private sector capex has been elusive. Do you believe that we will sooner rather than later see this? Again, I mean, is there some estimated timeline that you reckon, maybe in 2025, 2026, that there's a higher probability of private sector capex coming back with a bang?
So the one metric to look at is capacity utilization across sectors.
Right.
And that has been inching up. In a number of sectors, it's over 75%. In a few sectors, it's over 80%. So as it starts getting over 80%, that's the right time for companies to start thinking about capex and making sure that they have enough capacity to meet the demand going forward. As consumption increases and we see further growth, it only accelerates the need for private sector capex. And you're right, for us, we've tripled capacity in the auto business in the last 4 years. We've added significant capacity to farm, to a number of other industries as well. And that's because we've seen demand for our products, and that will drive further private sector capex. So again, we feel that India is well positioned right now. The actions that we've seen the government take have been for the long term, and to create stimulus for the economy in the recent past around the short term for consumption as well. And that's the right set of actions that will enable private sector capex to come in and provide a further boost.
Okay, you're an industry captain, but a lot of our audience are investors. I would love to know. The worry seems to be that we're not getting out of this growth quagmire. I know I'm maybe repeating this question, but I'm just trying to understand. We've seen a bit of an uptick in Q3 numbers relative to Q2 numbers. The hope is that Q4 and then Q1 onwards, some of these moves that the government has taken will bring about an impact. Do you reckon, I know you mentioned that there's no reason why India can't grow at 8%, but I'm not going that far. I'm trying to understand, do you in your wisdom believe that, let's say Q1 FY26 or maybe Q2 or Q3 onwards, we will actually see meaningful growth come back? Is there some estimate around the timelines that you have?
So if you look at rural India, we've seen growth coming back already.
Okay.
So our estimate for the fourth quarter is that tractor sales will be 15% higher than the previous year from an industry standpoint. And that's a fairly significant level of growth for tractors. It's in a very good place at this point. We see some of that momentum continuing into next year as well, though it's a little early to call next year from a rural standpoint. There is a lot of positivity around that. We've seen some slowdown in urban, but there again we feel that's more of a blip right now. So we would feel very confident that by Q1 next year we're going to see the economy on a faster track from a growth standpoint.
Okay, does the budget kind of try to address the urban slowdown as well? Because in effect, a lot of that taxpayer savings that happened impact, I would presume, the urban consumer.
That's correct. The tax effect as well as the rate cut, a combination of both of those, will provide a stimulus from an economic standpoint. The key is to ensure that inflation does not come back, and that's a fine balance. And therefore, the RBI has its task cut out, but it's a balance I think they've handled very well in the past. And as they do that, I think we will be in a good place to see growth coming back.
Okay. I'm sorry if I'm putting you in a bit of a spot, but because you have US business interests as well, and I'm just trying to understand, what are your thoughts on the India-US meets that have happened? There is, I mean, the tariffs, reciprocal tariffs, what have you. Rhythm Desai was here in the morning and his note suggests that the risk of a large impact of reciprocal tariffs is very less. Would love to understand, one, that from you. And two, somebody invoked this thought and asked me to ask you this. I mean, what if there were trade agreements which were nearly equal to a free trade agreement between India and the US, and if all of those moves were to happen, what are the impact for Indian industry per se? Any thoughts?
So the starting point is that the relationship between India and the US is very strong. And I think that's a very important factor. Each country is going to take actions based on what is required for that country at that point in time. And on a longer term, we want the world to be completely free from a trade standpoint. And that's positive. We've seen the benefits of globalization in doing that. But we've also seen each country, and whether that's the US or China or Japan or Thailand or India, take actions based on what makes sense for every industry at a particular point. And our sense is that will play out in some form. I don't see a world where there is no tariff at all across the board. Right. That doesn't make sense for multiple countries because it depends on their phase or their life cycle at that point. So I think we will come to a place where it makes sense for both countries. There will be some industries that are hurt more than others possibly, depending on what finally happens. But I do feel that it will be in a place where it makes sense because India has to protect manufacturing in a significant way as well, and that's an important lever for India's growth for the next decade.
Yeah, I mean, and which is why my concern was that could that have an impact? Because for the last 3 years or 4 years, we've been talking about the China +1 benefits coming into other ASEAN countries. Some of them have come to India as well. Do some of these trade agreements or reciprocal tariffs impact that manufacturing ambition in a meaningful way? You don't think that?
Given the relationship that we have between both countries, we feel that India will be possibly in the net gainer category. But as with the world right now,